Welcome to part 2 of your Bitcoin virtual roadmap. Once again, I'm Michael Robinson. In my first video, you learned all the essential facts about Bitcoin. You saw how and why this brand new currency is taking the world by storm, why it's rapidly growing in popularity, and how it's creating wealth for ordinary folks all around the globe. You learned about the technologies behind the new currency, why they've made Bitcoin inflation-proof, private, and safe. Most important, you learned how to quickly and easily set up an online Bitcoin wallet. Now, I can't stress enough, setting up a Bitcoin wallet is critical to your investing success. So please, if you haven't already set up your wallet, I urge you to go back and review the first video now and follow the easy steps so your wallet is set up and working right away. Because today I'm going to show you just how to begin using that wallet. Now, this is where things get really exciting and really rewarding. Today, you're going to learn how to become a Bitcoin expert. First, we'll examine all the different exchanges where you can trade with Bitcoin. These exchanges have significant differences, but I'm going to show you the pros and cons of each. And I'll show you step by step just how to play them for maximum profits. As you'll see, it's this flexibility, the ability to trade internationally, that makes Bitcoin investing so exciting and so lucrative. Then we'll explore charts and patterns together. I'll teach you how to find specific trends and trigger events that can lead to aggressive profits. Now remember, before we get into today's Bitcoin lesson, I want to say this again, and I can't stress it enough. Make sure your Bitcoin wallet is fully set up and ready to go. If you haven't done so yet, please do it now before going a minute further. Okay, let's get started making some profits with Bitcoin. This is where it's going to get really, really fun. Now, if you want to trade Bitcoin successfully, the first thing you should do is just to kind of look at some historical data, and you're going to want to find trigger points, and we're going to be looking for patterns. You can do all of that by examining charts. Now, charting can be as complicated as you want to make it. Unfortunately, I am an experienced charter. I spend a lot of time examining charts, mostly on equities, but I do spend a lot of time looking at Bitcoin charts. And I've got a way to boil this all down and keep it simple. Now, I've got 30 years experience, and so what I'm trying to do is just get to the most basic things so that you'll be able to get the basics of charting Bitcoins on your own in a session today. Now, bear in mind, you can spend anywhere from several hundred to several $1,000s spending, anywhere from 2 to 5 days on charting seminars. And there's tons of books and all sorts of videos you can buy, home study courses. We're going to keep it really simple today, and most of what we're going to need to do, in fact, fortunately, actually everything we're going to need to do today lives online at a free website. So you don't have to spend any money for a charting seminar, and you don't have to spend any money to use these tools. They are free of charge. We are going to start off by going to a really fabulous website, a lot of resources. It is called bitcoincharts.com, and you should see it on your screen right now. What a great name, bitcoincharts.com. This is really a fabulous website. We've got a lot of charting tools, and we're going to go through those in a minute. But you can see that just by going to the home page, you can see what a rich resource this is. Right here on the left-hand side at the top of the page, we have all the things that are going on in recent news. There's a new article for Bitcoin Magazine. A company I know and follow, Capochi, has got some news going on. Down here below that, you can see where you can go. I live near Oakland, California, so here's some places I can go and buy Bitcoins if I want to. Over here on the right-hand side, you see where it says market. So we've got a list of some of the major markets out there and what's happening with the prices and what are the percentage changes. And it's giving you some sense of what the volume is over 30 days. So just right off the bat, we've got already, you can see there's going to be a lot of good tools here. Now, there's some great charts. So let's go right to those tools, and we're going to build some charts. We're going to customize them. I'm going to show you the trigger points. We need to go to the link underneath, right over here on the right-hand side that says charts. We click on that, and it's going to load. And so we're going to go all through the tools here. First of all, the first thing we want to see, I'm going to take this volume out for now, and then we'll come to that in a moment. The default setting is it's giving you a chart for the market under symbol, unlike stocks, which would be the stock symbol. So it would be, AAPL for Apple, or GOOG for Google, or INTC for Intel. The symbol here are individual Bitcoin exchanges. And here are several of them up here, and they're all abbreviated. Like for instance, Ripple is a new exchange. It's getting a lot of buzz right now, so we could go look at Ripple. We could go up here and look at any number of these, but Mt. Gox has got the it's the big player in the exchanges. It's got by far the largest volume, one of the older ones around, and so that's going to be the default setting here for Bitcoin charts. It's going to say that it wants to look at Mt. Gox. Now then, we got a time period here. The default setting is 2 months. I need to pull this down just a little bit, give us a little bit more of a close-up here. 2 months is the default setting, and I really kind of like to look at 6 months of data. So let's pull down. If you're following along with me on your laptop or desktop, go ahead and pull down to 6 months. We'll be talking about what's happened with this chart here. This big run up in price earlier this year, then a fall in the market, and we're going to be talking about how to figure out what you would have done at various times in the market. The default setting under chart type is candlestick. Now there are other things you can look at. You can look at the closing price of a day as a chart. That's just your basic line. Doesn't give you a lot of information. You can look at things like what the average price was. Again, that's going to be a line. You won't be able to determine patterns from that. I use candlestick charts every day of my life. I'm looking at some chart and I'm using candlesticks. This has become sort of the default pattern for many, many traders and investors. Candlesticks, because they can tell you individual days. Just quickly, these candlesticks here, these are actually the price movement of individual days. Let me just blow this up real quick. I'm going to get extreme, so we'll see what we're talking about here. At a month, you can see here, these candlesticks, we could spend hours or even days talking about individual candlestick patterns, but quickly, here the price opened at this price that day, and it closed up here. So a green candlestick, all other things being equal, is a good day for the bulls. And you can see over here, the price opened, this looks like what, June 28th, the price opened here, somewhere around $102, and ended down for the day. So this right here, this large volume here tells you that there was quite a decrease that day. This is an extreme blow up. Now let's go back to our 6-month view, because each one of these days is telling you the price. You have the open and you'll have the close. Now then, a really, really useful tool. One last thing, before I say this, I forgot to mention this. Today we're lucky, every time I've hit something, the chart has automatically drawn for us, but there's a useful tool here called draw. And every once in a while you may find you need to hit that to refresh the chart to make sure that it draws and does what you want it to do. But as I said, today everything's working fine. Now, going back from left to right, we've talked about symbol, time period, chart type. We're going to go over here. Let's ignore price band for now. We'll conclude with a quick conversation about that. Moving averages are really, really useful tools. In fact, I would say that you really probably don't want to try to do any real significant charting without some sort of moving averages. The reason why we have moving averages is exactly what the term implies. It tells you how the average price is moving over a period of time. The industry standard, by far the most widely used, is a simple moving average that looks at 50 days. Let's just see if it's going to go. This brown line that you see here is telling us the average price moving over 50 days. Why that's significant and why this has become the default setting for most investors and traders is that's 10 weeks of trading in the stock market. Stock market's only open 5 days a week, not counting holidays. So 50 days gives us 10 weeks. That is a very good, 2.5 months is a pretty good sense of where a market is going, where a stock is going. In this particular case, it is Bitcoins. Now then, so you can see here on the 50-day moving average, let's just look at what's happened here with the price of Bitcoins. You can see way back here at the beginning of the year, it moved very close to the 50-day moving average. It just keeps telling us that the bulls love this investment and they just keep buying more and more. Price keeps going up and they keep buying more. At no point from January until roughly mid-April I'm sorry, a little later in April, does the price ever fall below the 50-day moving average? That gives us a sense of the bullish sentiment. The price here represented in candlestick charts against this 50-day moving average. And as you can see here, it trades below the 50-day moving average for a while, and then it comes back up. Now, so what that means is a lot of investors look at the 50-day moving average. Back here, you might have thought, boy, that's just too far away. And look, it was. You can see that the price corrected. As we get over here, the price is moving too far below the 50-day average. And I know that a lot of traders, I just had this very conversation with someone at the office this very week when the price got down in here and saying it's too far away and it needs to go back up. Now, that's all we really need to know about the 50-day moving average, but that's just one indicator. I really like to use 2 moving averages as a minimum. Typically, this site doesn't allow us to do this, but some people will use 3 moving averages, like 20, 50, 200, something like that. Again, we're going to use a simple moving average. I want to look at what's going on over the long haul for this market. And so 200-day moving average is another industry standard, and you can see it's a purple line here. Let's blow this chart up just to make it a little easier to see these lines. Let's go back to the default setting of 2 months. Here is the 50-day moving average. And here's the 200-day moving average. And what I like about this is I told you before, we got to where the price was too low, too far below the 50-day moving average. And as it turns out, we find that the 200-day moving average has become critical support. At this point in the history of Bitcoins, this 200-day moving average turned out to be critical support. The price here fell as low as $65 before bouncing off the 200-day line and is now running up to the 50-day moving average. Now, there are lots of schools of thought. The aggressive traders would say, as soon as it hits that 200-day moving average and I get 3 to 5 days of trading for confirmation of the trend, I'm in. This particular time, that play worked out great, and you could have made 30% in about 5 to 7 days. Other traders will say, well, I really would like to see this cross back above the 50-day line, and when it's trading back above the 50-day line, I know that the bulls are back in control of this investment. This is really going to depend on your charting skill level, but more importantly, your own investor psychology and sentiment, your own experience level. There are all sorts of schools of thought, but the 50-day line is a critical one. And if you are a person who says, I don't want to buy below the 50-day line, you'd be looking for it to cross above the 50-day line, as it did back here, and looking for confirmation of the trend. In this particular case, the bulls lost control, the bears came back in, but here at the 200-day line, and what that means is when it hit $65, I remember when it hit $65 Bitcoin, I thought, oh my God, this is a great buying opportunity. And so people will say, the bulls will say, I will buy all the Bitcoins I can get my hands on at $65. I'll buy them all day long. And that's basically what has happened here. So we are going to want to look at some more historical data. And one of the ways that we want to do this is we want to go back and look at what happened to the market earlier this year. Remember when we went back over here to the 6th month to give you a sense of where the market was all of this time? All right, so we're back to the 6-month line, you can see, and we're going to talk about what happened here in just a moment, but I want to give you a couple of more tools that I think are really important. I like to show volume. I like to see volume in the market. And I hit over on the far right-hand side, there's a tab that says Options, Show Volume Bars. I like to do that because it gives me a sense of who's in control. When you use volume bars, you get a sense of whether the bulls or the bears are in control over a period of time or in individual days. And so let's talk about that. The volume continues to rise, and there are far more green days, meaning that these are winners for the bulls, than there are red days. And you can see how it's pushing up, how the price is being bid up on rising volume. That's a classic bullish uptrend. Now, when the price corrects to $266 and heads back down, look at all this red. Massive volume during this correction phase. And again, we can go over here to what's happened recently. It bounces off of the 200-day line. Let's do a close-up. I want to show you what this looks like so you can get a greater sense of it. Let's go back to the 2-month. See, We hit the 200-day, we just crossed a little below the 200-day moving average on which is obviously high volume on a sell-off. Volume comes back green, a little bit of a red day, and look, as the price is coming back up, volume is rising on bullish days, on up days. That's also another very bullish pattern. Now, let's go back to our 6-month view, and we are just about finished with our options. One of the options that I like to do, we've talked about the volume bars, so you know how to use those. And you know, you can use them or not use them. You can take them off, put them back on, and I may do that some more today in just a little bit. One of the things I really like to use is something called the log scale. That's short for logarithmic. And what I like about the logarithmic scale is it really kind of smooths things out because, as you know, the difference between a $10 security and a $20 security is much more than the difference between a $20 security and a $30 security. In this case, it happens to be Bitcoins, right? When you go from 10 to 20, that's a 100% increase. When you go from 20 to 30, it's a 50% increase. And we can smooth that out, fortunately, by just this little thing right here under options. It's called the log scale. And you see how it really smoothed out the market. Before, let's just compare them. Before, see how it ramps up? I mean, this is running like crazy, but when we get it logarithmically, the market seems much smoother and much more rational, which it was. First thing I see is look back here in the 200-day line, which is purple. See that tight band there out there? When you see that log, when it's on a logarithmic scale, you can see that the Bitcoins right here in July are trading in a very tight band. They break the 200-day line, trade in a very tight band. This is the volatility breakout right here. Let me just blow this up for you, show you this volatility breakout. See? Tight pattern, boom. This is what's called the volatility breakout. That's beyond what we can get into today. That's advanced charting. So I'm going to leave the log scale on. There's one thing I jumped over, and I just want to touch on this, and I jumped over it for a reason. We have a lot of technical indicators that we can use. We're not going to do that today. We could spend an entire weekend just talking about the technical indicators that are available for us. But I'm going to tell you what some of them are. If you want to look at, you can look at Bollinger Bands. Those are widely used. You can look at ease of movement. You can look at what's called MACD. You can look at the money flow index. Really, you've got a lot of, look how many tools we have. We've got a lot of stuff here. That's just going to complicate things. We're going to keep it straightforward today. So we're not using technical indicators. So I just wanted to go over that with you. I'm going to go back to the 6-month view for just a moment. Now, when it's on this logarithmic scale, you see, again, we are way above the 50-day line for a long time, and you can see it running up here. And we're going to look at this in detail here. We've talked about support, and we've talked about trading in a band and volatility breakouts. But one of the things I really would like to do, and this is going to give me a chance to show you another really cool tool. I like this a lot. I want to look at what happened in this period here and put this in some historical context. In January of 2013, Bitcoin really begins to take off. And in fact, let's just do it. Let's go to a longer view. First, we'll go to a year. And you see how it's just kind of bumping along here, sort of trading along toward the end of the year. And then this year, things really begin to take off. Why is that? Well, Bitcoin is starting to become, starting to get out there in the consciousness. The market is beginning to mature. More and more people are getting interested. They're finding this as a great alternative investment. They're more and more concerned about what's happening in Europe and with U.S. debt. And this is a great place for people to be. So we've talked about all of those things. We've talked about this one-year time period. I'm going to go to a customized time period. This is really cool. I want to show you what happened at the beginning of the year and then look at in some detail at how it ran up to $266, which is the all-time high, and then how you would have seen that this was going to head back down. Custom time. You click in this window and you have your calendar that you can choose. And I'm going to go back to January 1, 2013, and we want to go to April 1, January 13. Now, for some people, all these volume bars may be a little distracting, and since this is something we can easily correct, let's just take those out for now. And we'll put them back in a second. You can see here, this is where we're going to get what I call a volatility breakout. Volatility breakout is defined as when it's trading in a very, very narrow band here around the 50-day line. You can see it's really starting to build here, the price, and it keeps on going. We're starting to see a lot of people looking for options outside of the US dollar, the world's reserve currency. And I'm going to go back and forth here a little bit, so please bear with me. Let's just see what's happening with the volume during that period, because now we have a clean look at what the chart looks like from the candlesticks. And you can see how the volume is lighter here and is really starting to build. And what that means is that average volume is continuing to rise. As we run up here in April, look at this. March 19th, where are we, around $50? The price of Bitcoin doubles between March 19th and I have April 1st. I'm going to show you something that's really cool about this charting system here. You can, if you want, click a day at a time so you can see what's happening on a daily basis with this market. Here's April 1, and let's just go one more day. And it's going up. You can see now we're well above $100. This is how fast it's moving, right? We were here, below 100. We're well above 100 already in just a few days. There was an incredible buying frenzy around this period. Let's do one more day, another. You can see where the market is heading. Look how high it's going. Look how quickly this market is just exploding. In fact, it's moving so fast that since we're on the logarithmic scale, when I hit one more day, did you notice how the chart automatically had to get larger to show it? See? It stops at 200, but it's a logarithmic chart, so it has to increase in size to show how much is going on with this market. Every day, the buying frenzy is just enormous. Look, now we're above 200. Where were we at back here? Less than 100. We're at 200. We're already doubled our money in a short amount of time. If you'd been following these triggers back here, you would have already been in. And we're going to see it collapse right here. Now, the market ran too fast. I'm going to clean it up again one more time just so we can take some of the volume out, just so if those of you are confused by the volume indicators on the bottom here that going vertical, they conform to what's going on over here, which are the thousands of units that are being traded. Let's take them out to make it a little easier to look at. There's the chart. Here's the price. Look at it moving steadily above the 50-day line, and it's just so far above the 200-day line, but it's run up so fast that it can't possibly sustain that itself. Let's put the volume back in here. Once again, as a reminder for people, it just happens to be I like the way they've sort of lined this up. Red volume days means that the volume rose on down days. Green vertical bars, look, over here, 180,000 traded on a down day. And yet there wasn't that much movement in the price that particular day. The bulls come right back in. Here we go. Very tight band. We're going to get another volatility breakout. And this is the big volatility breakout that really stunned everyone in the Bitcoin community and how quickly this moved. Let's take this out again, just to show you one more time. If it's confusing, I want you to be able to see the price pattern in the candlesticks above our indicators. Remember, this is the 50, the medium term. This is the 200, the long term. And we don't want to spend a lot of time. I just want to show you this quickly. If you wanted to, instead of doing logarithmic scale, you could do the percentage scale. And you can see from our base period of January 1, at the height, the price was up 1,900%. Even after the correction, it was still up 900%. But we're going to go back to our log scale. So just to make sure that we understand this correction, a correction like this actually is a very healthy sign. When markets get too far ahead of themselves, we want to see it fall, and we want to see somebody catch it. We want to see it fall, and we want to see somebody catch it. And the reason why I'm making that imperative is healthy markets will correct. Unhealthy markets will crash. This is a correction, albeit it is a major correction. At the high, it was 266. At the low, it was 65. But as I've shown, and we'll review it before we close out here, you will see that it's a correction and not a crash. And it's a classic correction. And let's go back to today. I'm sorry, let's just do 1 quarter. Let me amend that. We're going to do 1 quarter. So we want it to end on It's going to be the April to June period. And let's look at the volume bars. And you can see what happened. Remember, we ran up here way above the 50, but look, it corrects on huge volume. These are all red days. The bears are in control of the market, but they haven't destroyed the market. The market is healthy. Look, it hits the 50-day line and traders go, hey man, I'll take that action. I'll take that action all day long. Again, I talked about this earlier. A lot of traders will look, if they think that something is ramped up too fast and they're late to the party, they will patiently wait until this increases below the 50-day line, look for confirmation of the trend and head back in. And look what they did. They got back in. There's another shakeout, but look how long this market trades in along that 50-day line. That's a healthy market. This is a very healthy market. When we can trade when the 50-day line becomes key support for a long period of time. Now here the bulls cannot exert enough control. They cannot say, we're taking it back to 266. As it heads up, the bears start betting on a decline. Here we're trading along the 50-day line, and all of this is a very tight band. It looks like it could be a volatility breakout. This has not occurred. There's some test of the market. In June, there was some negative news in the Bitcoin industry about certain businesses, or the U.S. Senate. The politicians always want to get involved in things, and they were rattling their sabers at this period, saying they want to try to control it. As of right now, there is no government anywhere in the world that has any control of any Bitcoin market or exchange or business. And then we're going to finish this out here by looking at where we go here. And you can see here on this logarithmic scale, during this time period, we never hit the 200-day line. Let's go back and get rid of the custom time frame. Let's go back to 6 months. And there you can see the 200-day moving average has become critical support. Very cool. Now, the big test comes here at the 50-day line. Let's blow that up because we want to see a 50-day line we want it to become support, not resistance. So the big test over this period of time as we're taping this today, and I've talked about this happened all along in here. The big test is at the 50-day line. So a more conservative trader would look for what we saw earlier where you traded along the 50-day line for a while or above it. You'd look for it to cross the 50-day moving average and trade for several days. That's a little bit more conservative. Those people are willing to give up some of the massive gains that they can get in the early days because they want to make sure they haven't got what we call a head fake or a false breakout. Those are charting terms. The aggressive traders are in here. Had you gotten in here, you would have made 30 to 35% in really very little time. I want to talk to you about a very important concept, and I'm going to go back to the 6-month view. This last concept I want to leave you with is what we call reversion to the mean. I usually call it reverting to the mean. They're synonymous terms. What do we mean by that? What we mean by that is the mean is an average. It's a floating average. It's an average of prices over a period of time. Healthy markets have a tendency to revert to the mean. And what that means is if the price gets too far up or too far down, the bulls or the bears come back into the market, a healthy market, and push it one way or the other. So when the price is too high, people will start shorting or people will start taking profits or both of those things, bringing the price back down. We are going to take a look at, earlier I said under chart type, we talked about the candlestick. Below that, you'll see something called the price band. Again, we could spend hours talking about each of these. There are 3 choices. One is a Bollinger, one is a Donchian channel. This is the one we want to look at today. What I like is this envelope because it uses the simple moving average of 20 days. That's a month of trading. And then it tells you where we are plus or minus 10%. So our standard deviation is going to be plus or minus 10%. So let's pull down. Let me just do that again. We're on none. Let's go into price band. It's in the middle here. See? We're going to pull it down. We're going to look at the envelope. All right. Now you can see where this envelope is here. All along here. This is a hugely bullish market. The entire time we're trading up here, we're way above the 20-day line, way above 10% above it. And again, as I said before, this price run is not sustainable. It's increasing so fast, it's not going to sustain. And again, I said it was not a crash, it was a correction. Here we are. And look what happens. We revert to the mean. A little bit too above it, comes back, a little bit too below it. We revert back to the mean, and look where we are here. Again, it's a little too high. All along in here, we're reverting to the mean, and look what happens here. We go too far below the 20-day average in this band as it hits the 200-day moving average. What that means is the 20-day moving average is actually falling fairly quickly, but the 200-day moving average continues to sort of increase, and then it stabilizes. And this is what we're looking at right now. Let's just blow this up. Let's look at it for 2 months. You can see where we are now, too far outside the channel. Right now, we're trading at the very edge of the channel. I'd say it's probably we're gonna have a little bit of a sell-off. Also, the other thing that's gonna happen is the channel itself is gonna move back up again. Just for fun, pull down the 6-month chart, and I'm gonna show you. Bollinger Bands are another heavily used channel, and they take into account more standard deviations in a longer time period than the simple moving average. But again, you can see all along in here, we're trading, technically speaking, we're just inside the Bollinger Bands, but you can see it's, what is it? Yeah, there's the fourth one. Usually it's three legs up, and it corrects. We could spend hours talking about why there's a 3 legs up. You can see how much volume has to be filled in here. And now we're getting the Bollinger Band tighter and tighter. And here it is opening up back up again. This opening up right here with this volume indicates to me that we're probably going to see this thing widen up as the price heads on back up again. Okay, that's it for charting. I hope this has been useful for you. And again, you can set any time periods you want. You can blow it up. 2 months is the default. And this is what it looks like. And we'll go back to, this is how when you come into this website, this is how it's going to look. And we, as you can see, we really jazzed it up. We have a lot of tools at our disposal, and hopefully this is going to make you a much better trader of Bitcoins and other investments as well as you learn these charting principles. So join me here in just a moment on the exchange portion of this tutorial. All right, so we're ready to start talking about exchanges. First, though, I want to tell you a little bit about the wallet and the importance of it. In DVD number 1, we said you need to set up a wallet. As a reminder, we said you could set one up on your desktop or you could do one online. And I also told you to consider Coinbase because it's a good online wallet. They have a lot of security, a lot of functions, one of which is that they also back up your Bitcoins offline to protect it against the possibility of hackers. One of the things that's really interesting about Coinbase as a wallet is you also can buy and sell Bitcoins from here. Now then, how this differs from an exchange is that Coinbase as a wallet doesn't have the advanced features that you would have at an exchange. Just like, say, at E-Trade for stocks, you'd be able to buy and sell options or short stocks and so forth. Exchanges give you more tools in that regard. For just buying and selling Bitcoins, Coinbase is fine for that. One of the things is you need to think about Coinbase as what I call a permanent wallet. I'll show you this in a minute when we're on the exchanges, but each exchange has what's called a wallet in and of itself, and that's basically another word for you can store your Bitcoins or your cash there while you're making trades. The good thing about having Coinbase as a permanent wallet is whenever you've bought Bitcoins and you want to store them because you want to hold them for a long time, you can transfer your Bitcoins through the system back to Coinbase where they're going to be safely stored both online and then they're going to keep them mostly offline to protect you. And first, I'm going to need to sign in. Okay, so now we're ready to buy Bitcoins on Coinbase. You can see here we have a tab. There's buy, there's sell, history, and so forth. When you go to buy Bitcoins, there's 2 ways to do it. One is through your bank account. The standard way to do it takes several days because it has to go through the entire financial system. Coinbase has just added the ability to do instant transfers of cash out of your bank account and buy Bitcoins instantly, or near instantly, I should say. I'm signing up for that. That verification process takes a little bit of time. So if you don't have that verification process taken care of, you wanted to buy one, you would do this, and you would get a window that tells you, you get your things here, the fee for Coinbase and for the bank, and there's the total, and you would simply hit buy Bitcoins. In this particular case, it's going to tell me that this will be confirmed in several days. Cancel out of that. We don't want to do that today. Now let's sell some Bitcoins here. I have in my account, I have 2 Bitcoins in my wallet waiting for me today. And I'm going to tell them I want to sell these 2 Bitcoins. I'm going to get $186 for the 2 of them. I'm going to pay a small fee, and I'm going to hit sell Bitcoins. Now that we've got the wallet portion of it going, what I want to do is I'm going to take you back to Bitcoin charts. We were there earlier looking at the charts. One of the great things about Bitcoin charts is go to this tab that says markets. This is just awesome. I'm going to click on this, and now we have a look at everything that's happening on most of the major markets around the world. The first one is the world's largest market, and this is Mt. Gox right here. What's really great about this is you can see that it gives you the latest price. It gives you the average over a certain number of days. It shows you here a little just a little mini chart of what's been happening on this exchange over the last 30 days. You can see the volume. You can see the recent low price. I think this is a 30-day rolling period. So today it's at 97. The average over the period has been 91, and the low is 95. So here's just a very quick snapshot. We can do the same thing for another major exchange. It's called Bitstamp. We can talk about that briefly, time permitting, later. Another one would be, there's Bitcode. You can see there Europe, Canadian, US dollars, Australian. There's all kinds of different exchanges, and you can just keep rolling on down, and you'll see there's exchange after exchange after exchange. And this is the only place I know of that gives you this really great overall global view of what's happening at all these various exchanges. And you can see the difference in volume between the 2 exchanges. Mt. Gox up here is up below that. You see it's got like something like a million, almost 2 million have traded. Below that is Bitstamp, almost 1 million have changed hands. We're not going to spend a lot of time on the charting, but I'm just going to say that if you want, because we've already done that, but if you wanted to just get a quick snapshot of what's happening at Mt. Gox, you would simply click on that highlighted section, and then you would go right to a chart right there. And it can show you trade history. Click on that. And that's just going to give you this is kind of cool. These are the reported trade volumes going back over a year. And then here are individual trades on the right-hand side of the screen. So you can see that on July 16th, at a price, the volume was 3.57, and straight on down. So this is kind of a nice tool to have. I do go there pretty regularly, so I can literally get a global view of what's happening in the Bitcoin markets. And this is just a great way to keep abreast of changes. If you add this to the charting tools we talked about, very quickly you can go over here. You can look at what's happening with individual charts, but also get your bird's eye view of what's happening throughout the entire Bitcoin exchanges around the world. The major ones, some smaller ones might not be on here. One of the things that's really interesting about here at Bitcoin charts when you look at the markets is the color coding. It's a green day. It's up days everywhere. Here we go. We have a neutral market. Things are just neutral at this market here. This is a European market that I'm not familiar with. Here's another overseas market. They're having a down day there. So you see the green days lets you know that we have advances in the market going on. I'm going to talk just briefly here about, for you advanced traders, there are some arbitrage opportunities. I recommend this only for very advanced traders. Arbitrage is basically taking advantage of small price differences among various markets. For most other markets outside of Bitcoin, you can really only do it as black box traders because the differences are so minute and only last for a flash of a second. Here you can see that the price varies widely on Mt. Gox. The latest price was, now that's the latest reported price. The latest reported price was $97.425 per Bitcoin. But over here at another exchange called Bitstamp, also it's quoting in US dollars. Just a few minutes, less than a minute ago, the price was $91.58. Now then, what that means is that if you had money stored at Bitstamp or wanted to transfer money over or somehow fund an account at Bitstamp, you would be able to go on to Bitstamp or some other exchange where they're selling for less money, buy them there, and then transfer those Bitcoins into Mt. Gox and sell them there. And in this particular case, theoretically, you'd be able to make as much as $5 per Bitcoin. Now, it's time intensive. I don't know of any way to do an automated trade. There's no, as far as I know right now, there's no automated. Certainly for standard average investors, even advanced traders, for most of them, there's no black box trading I know of that would be able to exploit this. So it would take you time and effort to go in there and buy on one exchange and sell on another. But it is arbitrage. Our opportunity is a way to make money, and you can see right here you can make anywhere from 5 to 7% on the transactions, not counting fees. And that's the other thing that sort of limits the arbitrage opportunities here, is that you have transaction fees each way. So you have to decide whether or not a theoretical gain of 6% is a profit for you when all the other fees are added in. But I just wanted to let you know you could do arbitrage. You will find people talking about arbitrage opportunities on the internet as regards Bitcoin, and this is exactly what they're talking about: finding discrepancies in prices between or among different markets. Now then, let's take a look. We see there that Mt. Gox is still the largest. There's some pros and cons of this site. It's got good functionality. It's not the best functionality, but it's pretty good. The main thing it's got going for it is it's the oldest and most established, or one of the older ones, and it's now clearly the most established. It's the world's largest. It accounts for anywhere from 70 to 80% of the volume that occurs in the Bitcoin market. It's pretty easy to use it. You can see it's a very straightforward website. You just go right, you can go buy Bitcoins, sell Bitcoins. The disadvantage of dealing with Mt. Gox directly is that it's a little bit difficult to get funding there. They're working on that. One of the things that they ask you to do is maybe wire money to them. The bank is based in Japan that runs Mt. Gox, or where their bank account is. So I personally don't like doing it that way. There are other ways to, one of the things you can do is you could say, buy some Bitcoins temporarily and hold them in your wallet at Coinbase, and you can transfer them over to Mt. Gox if you want. There are other funding ways to do this. Go over here to funding options, and it'll give you a rundown of what those are. I don't want to spend a lot of time on that, but I want to do some trading. Now, I have to log in here, and I'm in. So we got buy and sell Bitcoins. You see up here where it says your wallet. This is an online wallet for this exchange. Each of the exchanges allows you to store cash or Bitcoins, and most of them allow you to store, at least temporarily, both. Here, I last night transferred over 1 Bitcoin from another one of my online wallets. I have multiple wallets, and I'm a member of multiple exchanges. And so you see, we only have 1 Bitcoin in there, but what's going to be really cool is you can sell portions of Bitcoins. So let's just go in, okay? And one of the things I always tell people to do is as you see with stocks and options, there's a bid and an ask price. So what I usually do is I find out what the latest bid price is, and I usually put a small premium on there, 10 cents, 20 cents, because I want my transaction to go through quickly, and they're going to respond to the highest price they have first. That's just how it works. Since it's selling at 97.5, I am going to sell this for less money. I'm going to sell this for $94, $97.25. And you can see how instantaneously this transaction occurred. I now have in my wallet half a Bitcoin, and then I have cash of $48.40. Now that was lightning fast. Another thing I like about Mt. Gox is the speed with which you can do the transactions. All right, so let's buy Bitcoin. As I said earlier, you can do these in increments. As you can see right here, I've got half a Bitcoin left, and I've got the equivalent of half a Bitcoin in cash. But I want to buy now, and again, as I said earlier, you can buy and sell in all kinds of increments of Bitcoins. Half a Bitcoin, third of a Bitcoin, 5 Bitcoins, 5.6777 Bitcoins. Goes out several decimal points. So here's the latest prices. Now I want this trade to fill quickly. I'm willing to pay an 11-cent premium because I want this to fill right away. So I'm going to put in the price of $98 to buy it, and I'm going to hit buy. You can make a lower offer. There's your warning right there. You can make a lower offer, but it won't be filled until someone accepts it. Be willing, if you want to get into or out of Bitcoins quickly, be willing to pay a small premium. For me, it's worth it because I like for my transaction to go through quickly, and I'm going to hit buy Bitcoins, and I'm going to confirm the order. Shazam! There it is, just that fast. So again, let's do it again. We're having fun. Let's see. Now we have our wallet's got 0.75. Let's just do one more transaction on the buy side, and then we'll do a couple of more on the sell side. I want to buy a 0.15 of a Bitcoin, and let's see, is there a later price? Let's just give it, I don't know what the last price is. I'm going to pay another 10-cent premium just because I want this to go through very quickly. So I'm going to pay 98.10 cents, and I'm going to hit Bitcoin, and I'm going to confirm that that's what I want to do. And there they are. Boom. So now I'm back to having almost 1 Bitcoin. Let's do a couple of sells. I just want to make sure you've got this down here, the mechanics of it. Again, Mt. Gox, the largest, accounts for 70% to 80% of the volume in Bitcoins traded around the world. As you can see, it's pretty fast functionality. It's set up to sell half because that's what we did before, and let's do that. And we're going to sell it at we're going to let the market maker, whoever wants to buy it, make an extra profit to make sure this goes through quickly. So I'm going to sell it for 10 cents less than the going price. I'm going to hit sell Bitcoin. It's asking me, do I want to sell? And I do. And bam, there it is. $57 now in my account. I'm getting rich by the moment here. And 39.39, just short of 0.4 Bitcoins left. Let's sell another Bitcoin. Let's do it in a very small amount. Let's do 0.10. And we're going to sell it a little cheaper than the market. And we just sold this, and now our wallet, appropriately enough, showed that we've just gone down by what? 1/10 of a Bitcoin, and here is the corresponding amount of cash. I want to leave you with this thought here. We've gone through several examples of how you can buy and you can sell Bitcoins on Mt. Gox. I am using Mt. Gox as an example of the types of trades that you can do. There are multiple exchanges out there. BitInstant is one. Bitstamp is another popular one. One that I've used a lot in the past is called CantBX. What I like about CantBX is it's got a lot of functionality. It's also got a lot of security features built into it. The disadvantage of this website is that it can be a little bit slow to load. But this is going to give you the ability to buy, sell. You can do it by dollar amounts. They've got some advanced trading tools that would allow you can put in market limit orders. You also, once you are approved, you can see here, you can sell on margin. This also allows you, once you're approved to do so, if the market were to turn and you thought you could make money going back down, if you were the kind of trader who was aggressive and saw that opportunity, you could turn around and make money by, once it's going through a correction, you'd be able to sell it. You could sell short, and that would allow you to make a play on the temporary decline in the price. Now, there are other ones, as I said. I'm just going to quickly hit one here. This one is called Bitstamp. It's also very well known. You can buy and sell there. Here's their overview. They tell you what's going on with the price and so forth. We've talked about Coinbase and other places where you can do trading as well as use it as a wallet. And that's pretty much all you need to know about the exchanges. You're just going to have to find the one that appeals to you, that has for you the best combination of time to load the website, security features, ease of use, ability to fund. One thing though, that remember, you can transfer your Bitcoins all throughout the system. That's one of the great things about trading and investing in Bitcoins. We're back on Mt. Gox, again, the world's largest exchange, accounting for more than 70% of the daily average volume around the world for Bitcoins. And in this dashboard here, it says on the left, we have our trade tab, which we were at a moment ago. Now let's talk about funding options. And it's going to give you the ability to, first it wants me to log back in. Now we're logged back in here, and again, we have trade and we have let's hit funding options. And it's going to allow me to add funds or withdraw funds. And the adding funds, the default way to do this is using Bitcoins. And then here below this are other places where you could transfer money to or from. One of them is called BitInstant, is an area where it's an exchange, and also people store money there as a de facto temporary wallet. So if I wanted to add Bitcoins, what I would do is, it's going to give me at the bottom a Bitcoin address right here. A lot of people will tell you to write that down. This is what I do. I go on here and I copy it. And then if I want to transfer wherever I want to transfer this, say I want to transfer it back over to my wallet at Coinbase, enter an email or a Bitcoin address. Here's the Bitcoin address. And we're going to send them 1 Bitcoin. Okay? At $97.90, we're going to hit send money. You sent Bitcoins to an external account and it says it's pending. It's going to take a little bit of time for this to show up on the other end. You can move it seamlessly from Coinbase to Mt. Gox or to BitInstant or to Bitstamp or to CampBX, back and forth as much as you want to. Please make sure that you join me on DVD number 3, where we're going to be talking about several exciting opportunities to make money in this rapidly emerging market for digital currency, Bitcoins.